In 2020, after Cathie Wood and ARK Invest published their research and price forecast of Tesla, the stock rallied almost 500%. By 2025, Cathie Wood is expecting Tesla stock to double several times. In today's video, we will analyze Cathie's forecast of Tesla stock reaching $15,000. So stay tuned. Cathie Wood and ARK Invest expect Tesla shares to triple to $7,000 per share by 2025, representing an 800% increase from the current price and a long-term price level of $15,000. In previous research, ARK predicted that Tesla stock would surpass $3,000 by 2025. ARK's bullish thesis on Tesla is predicated on the company's ability to develop and deploy a network of self-driving robot taxis successfully. Soon, in the video, we will talk more about this robotaxi, so stay tuned. This taxi network would function similarly to Uber's service of transporting people to and from various locations. Tesla's stock rose 400% to $654.87 when ARK Invest published its previous research on January 31, 2020. ARK used a Monte Carlo model. The Monte Carlo analysis they employ yields a variety of possible outcomes. 3 price targets were set in the company's forecast: the expected value and the bull and bear values. Tesla's expected value is $7,000, which is the most likely scenario. The bear position has a 25% chance of success, while the bull position has a 25% chance of success, but is on the optimistic side of the spectrum. In the forecast, Cathie Wood expects Tesla to get revenue from 4 sources: electric car sales, insurance, human-driven ride-hail, and fully autonomous ride-hail. Cathie Wood and ARK Invest expect Tesla to generate revenue from electric vehicle sales, robotaxi services, human-driven ride-hailing services, and insurance. On Tesla's electric car sales, ARK Invest and Cathie Wood previously estimated that Tesla would spend $11,000 to $16,000 per incremental unit of capacity. Tesla spent $1.33 billion on capital expenditures in 2019 and produced 509,737 vehicles, a 144,505 unit increase over the previous year, implying that its capital expenditure, CapEx, per incremental vehicle made was around $9,200. Tesla spent $3.16 billion on CapEx in 2020, indicating a capital efficiency of $10,330 in 2021, assuming a 60% increase in vehicle production. This calculation likely overstates the capital required for an incremental vehicle because some of the capital expenditures are for long-term projects such as Tesla's integrated cell factory. Tesla announced at Battery Day 2020 that its updated manufacturing process would reduce investment costs by 75% over time. Based on these updated estimates, Cathie Wood and ARK Invest forecasted that Tesla's unit sales would be between 5 and 10 million vehicles by 2025. ARK Invest estimated that Tesla could achieve higher than average insurance margins due to the highly detailed driving data collected from customers' vehicles. In August 2019, Tesla launched its insurance product.
This company to offer US customers an insurance plan designed specifically for Tesla cars. In August 2019, this partnership was superseded by a partnership with State National Insurance, but was initially only available to Tesla owners in California.
ARK believes that Tesla will expand its insurance offering to more states in the coming years, underwriting its insurance policies. Tesla should be able to use real-time data to offer insurance in its vehicles, lowering customer acquisition costs and increasing margins because its cars have better than average safety profiles. Tesla could achieve margins close to 40%, according to Cathie Wood. In Cathie's bear case, if Tesla sells 40% of its vehicles with its insurance offering by 2025, its insurance revenues could approach $23 billion per year. ARK estimates that Tesla's insurance revenues will be incorporated into a platform fee in their bull case. This would be a huge revenue, but the human-driven ride-hail revenue is expected to have the same revenue or more as this. We will talk more about it later. We provide a free educational and data-driven analysis of what is happening in the stock market and the best stock picks from top-performing stock investors. This can take your investing and stock selections to the next level. Kindly subscribe to the channel and click the bell icon to be notified whenever a new video is posted, so you don't miss it. ARK assumed that Tesla had a 30% chance of delivering fully autonomous driving in the 5 years ending 2025 in fully autonomous ride-hail. According to ARK, the probability of fully autonomous driving will be 50% by 2025. According to ARK, Tesla's vehicle fleet provides it with 30 to 40 million miles of data per day, up from 20 million per day in 2020. If successful, Tesla could rapidly scale its robotaxi service, allocating the extra cash to manufacturing capacity serving its autonomous network. They calculated that if 60% of Tesla's autopilot-equipped vehicles serve as robotaxis, the company could earn an additional $160 billion by 2025. Their bull case shows ride-hailing will account for most of Tesla's enterprise value by 2025. On human-driven ride-hail, ARK's bear case included Tesla's opportunity to launch a human-driven ride-hailing service. ARK previously stated that a Tesla human-driven ride-hail service would have a lower cost structure than incumbent companies, laying the groundwork for the world's first fully autonomous ride-hail network. In their worst-case scenario, ride-hailing could add $20 billion to Tesla's operating profit by 2025. Finally, according to Cathie Wood and ARK Invest's model, shares will likely increase in value over the next several years, with a $7,000 by 2025 and a $15,000 by the end of 2029. However, keep in mind that nothing in the stock market is guaranteed. As a result, before making a financial decision, conduct extensive research and avoid focusing solely on profit. As Warren Buffett will say, games are won by players who focus on the playing field, not those whose eyes are glued to the scoreboard. In the video appearing on your screen, we've compiled the top 3 stocks Cathie Wood thinks will skyrocket in 2023. So do well to check it out because you cannot afford to miss it.